Hello guys, it's Max here and welcome back to another video where today we are of course going to be analysing the markets. The market's been quite volatile over the last 24 hours, so we've got quite a lot to cover. But before I get into today's video guys, as always, anyone who is looking to join my trading group, this means receiving my trading signals as well as my daily market research regarding whatever trades we have open at the time prior to the US market opening, then make sure you visit my website, dailymarketmovements.com. It's where you can sign up to my signal service. I charge a very small fee, $29. Try it for 1 month. See if you get on with it, see if you enjoy it, see if it's beneficial for yourself. But currently I have over 100 people following my service, but I'm looking to build this up to over 1,000 in the come 2025. So let's get started with today's video. But yeah, if you are looking to join my trading signal service, then make sure you visit my website dailymarketmovements.com, and it'd be great to have you on board. Let's just start off with the economic data today. We had the PPI inflation report, 0.2%. Which is slightly hotter than the 0.1, which was expected. So inflation coming in slightly stronger than expected. But this is the PPI. In my own humble opinion, I think this is the least important reading. But more importantly, we had some labour market data, which was the initial jobless claims, coming 3,000 hotter than the 227, which was expected. Again, this is pretty much in line, so I wouldn't really be too worried about that data. But let's get started with analysing the S&P 500. S&P is trading up today, I think, for the day. Let's just put it on the daily chart real quick. Yeah, we're up around 0.2%, so some nice steady gains here. But if we just look at the S&P 500 on the 4-hour chart, some big developments have occurred here. You would have heard me say during yesterday's video that I want to see a break above the swing high that we achieved yesterday. Sorry, not yesterday, back on the 6th of September. And that was all the way up at 5,521, and we have in fact managed to break that, so that's now very encouraging. And what does that do exactly? Well, it does this: it flips this downtrend into a now uptrend, and that's very significant. So we can take that away. It's very nice that we've now flipped the 50 EM and 200-day EMA as well, and this is what I'm kind of looking for now, is if we can see this continuation of this trend higher. I think that the new targets now can be 5,650. I think that could be a relevant target as we go into the FOMC decision next week, and I'm obviously going to be sharing a lot of information about that over on my Telegram group chat for my Signal clients. Nasdaq 100, very similar to the S&P 500. We've now flipped the previous swing high, so again we're now in this uptrend pattern. I think what's more important as well is that we're kind of in this triangle pattern as well. So we have both the Nasdaq and the S&P 500 trading in this triangle wedge pattern, if that makes sense. Ultimately, we have to break either above or below. That will give us a lot of indication as to where this market wants to trade next. Exact same thing can be said for the S&P 500. We have this triangle pattern going on. We're currently testing the top of a triangle. Wouldn't be surprised if we fell down in the hours to come before we got a answer whether we break up higher or break down lower. So I think that we could just consolidate in this triangle for a little bit before we get an ultimate breakout, whether it be up or down. Let's have a look at the Dow Jones 30. Dow, a little bit better than the S&P 500 and the Nasdaq 100. This is largely due to the fact technology has been weak as of recent, and the Dow Jones 30 doesn't have that much exposure to the technology stocks. Obviously, there are a few big names in there, but it's not heavily weighted in tech names such as the S&P 500 and, of course, the Nasdaq 100. Let's have a look at Nvidia today. I think this has to be one of the stocks of the week so far. It's up 16% week to date. I did mention at the start of this week that there was massive support around that $100 area. We didn't even go down and test it. We've actually found some buyers, and very similar to the S&P and the Nasdaq 100, we still continue to trade in this wedge pattern. So ultimately, this wedge does have to be broken. Whether it be, if it's towards the upside, then we could see a big rally higher. But if not, we could see a big breakdown here in Nvidia prices, and we could go and close some gaps. So for example, there's a gap down here at around 67 that needs closing. That could be very interesting if we were to go and close this gap that occurred all the way back in February 2024. So all eyes on this wedge pattern, but I do believe that Nvidia is going to be one of the most important stocks moving forward. And investors are going to continue to buy the dip here. That's exactly what we've seen. Guys, I want to talk about Bitcoin as well. Bitcoin performing very well. We did actually briefly break above 58k for the first time in over a week. it looks really encouraging here for the Bitcoin prices. I still believe that we could flip the 50 and 200-day EMA and go all the way up towards 66,000 in the weeks to come. I think next week, especially with there being the FOMC meeting, I really like the setup here for Bitcoin and Bitcoin proxies such as the miners. I myself and the Signal team have many positions open with regards to this space. So that's going to wrap it up for today's video, guys. Don't forget, if any of you would like to join my Signal team, copy some of my Bitcoin trades, my Bitcoin proxy trades, also have a bank position open at present and a fintech position, then make sure you visit my website dailymarketmovements.com, and for the very small fee of $29, it could end up making you that back and more in profits. But thank you for tuning in for today's video, and I'll be posting the last video of the week tomorrow.